Well, good afternoon and welcome to today's FS Club webinar, which is on how does government use corporate finance techniques to support taxpayers. You couldn't imagine a more exciting topic if you tried, and this is all part of our government propaganda machine. Oh, no, excuse me. It's all part of getting the message out there about some of the really important things that are genuinely going on in government to try and help us as taxpayers get control of corporate finance in the public sector. And we have with us here today Matthew Rees. Matthew's the Director of Commercial Hub and Insights at the National Audit Office. I've known Matthew for many years and see him as one of the most responsible public servants I know, really trying to make sure that there's good value for money across the public sector. And we'll be covering that today, but most importantly, Matthew and his team have brought out a booklet, a guide to corporate finance in the public sector. And it's a really seriously good review of what's been happening as we've begun to see a variety of techniques being used across the public sector. And Matthew and the team are trying to provide best guidance to practitioners, both inside and outside. We'll come on to that as we go ahead. Anyway, you know me, I'm Michael Mainelli. I'm one of the directors of Zien, and it is a genuine privilege to be able to introduce all of these various webinars that we do. And we can only do so thanks to the tolerance and generosity of our sponsors. Now, our sponsors might say, well, this seems a wee bit like a UK government pamphlet and propaganda machine. It is definitely not. Matthew has truly looked widely and deeply and tried to distill with his group some general principles that apply everywhere. So I see this as a fairly universal applicability at the interface between economics, finance, and the public sector. Maybe not all that much about technology, but we'll see. Now, the format for those of you who've been here before is fairly well known. I'm going to get out of your way as quickly as possible. Matthew will be speaking for about 20 minutes. Matthew has 3 poll questions, so fingers ready on buzzers there, if you don't mind. And then 3 quick points for me now. Yes, it's being recorded. Yes, the slides are available. In fact, I think they're already up in the chat room there. The recording will be up in about 2 working days. It's just sometime over the weekend. So you can settle the family down on Saturday night and have a good old review. But most importantly, how do you participate? So in the Q&A, please use the GoToWebinar facility here. And if you've got points of detail, which are highly likely in a presentation like this, Matthew will receive all of the comments, questions, and observations, any links you want to send him with your email attached and get back in touch with you. So if there's something you just want to talk directly to him, just let us know through the chat room and we'll make sure that Matthew gets it. Well, Matthew, I think that's about all the housekeeping. We're really interested in this approach to the public sector finance. The floor is very much yours.
Thanks very much, Michael. Thanks for the introduction. Good afternoon, everybody. So if we go on to the next slide, please. I think the topic here is really, as Michael said, is intended to be global in its kind of outlook. So we're not just focused on the UK. But if we go on to the next slide, I'll just give a little bit about what we are and who we are in the UK. So our role is to audit UK government. You've got 400 departmental accounts that we audit, and then we produce between around 60 evaluative studies each year. The kind of product that I'm going to take you through, though, is what we call insights. What the advantage of this is that we can take stock of all the work we've done and really promote better outcomes in future. Clearly, we can only look at a fraction of what government does right across its vast field of activities. So as I take you through the guide, it'll be very much informed by our work, but very much intended for future kind of practitioners to get better outcomes in future. And then just on the right there, before I go into the detail of the guide, this accountability cycle involves the Public Accounts Committee and departments such as Treasury and BEIS, in most particular for what I'm going to talk about today. But obviously, any department is subject to that parliamentary oversight. All of our reports are published in Parliament, and then it's that public scrutiny that happens through the PAC, which is where a lot of our work gets amplified or expanded into recommendations for government. So if I go across to the next slide, and it's intended to be a little bit messy actually, because what it highlights is that over a really long period through the 80s into the financial crisis, back through a period of relative stability and then through COVID and now into the energy crisis, there's really a lot of issues which involve government supporting, investing, sometimes rescuing, sometimes creating, sometimes selling corporate or financial institutions. Lots of logos there that some of us will have greater or less knowledge or affinity with, some of which have disappeared altogether. So that's the context for this, and I think it's very much the starting point is that we wanted to consolidate a lot of the work where we've looked at these examples and tried to put a framework around it. So if I go on to the next slide, just got the front cover of the guide. As Michael said, it's available publicly. We'll put the link into the messaging. You can download it after. And really what it's trying to do is take a methodical view of corporate finance and how it relates to government activities. So we've got those three sections that I'll highlight, and I'll take you through them in a minute. Principles and concepts, which are the fundamentals that apply. Then you get into organizations and functions, which is more about how government organizes itself. And then the third one is about the transactions. And through all of that, we get really into detail. So the presentation gets into more and more detail, but I'm obviously going to keep it at fairly high level given the time today. So if we go on to the next slide, I'll just expand to explain what these three things look like. And as you see, there are actually 14 individual sections of our guide. It's an interactive PDF, so if you download it, you can click and navigate quite comfortably through these areas. So principles and concepts first. This is really at the fundamentals. So analysis, valuation, investment appraisals will be familiar to participants right across the commercial and financial sector. The area that I'll expand on a little bit as we go through the presentation is perhaps a little bit less familiar, which is government balance sheet and accounting. But then we come back to obviously common themes around capability, advisors, and then the governance and stewardship side. So we set out in all of this what we mean, what questions we would ask, and it's all informed by the work that we've done. It also links across to relevant government guidance, of which there's certainly no shortage in the UK. Not always easy to find, but hopefully this is a kind of bit of a one-stop shop to get hold of it as well. The other two areas, sort of drilling down, the organisations and functions, we've done lots of work across corporate entities, companies, and then joint ventures. And we've also looked at government financial institutions. We've landscaped this and we've looked at things like the UK Infrastructure Bank recently. My colleague Simon looked at that. And then we get into the commercial functions and regulators, and you'll see perhaps our work around the energy market, where Ofgem's capability to understand the health and resilience of the energy suppliers has been pretty actively tested, and it will be continued to be under scrutiny. So these organizations need to have the capability. Those principles and concepts apply to all of them. And then obviously the transactions, but we've looked across the board, and perhaps these are the things that come first to mind, and I'll give a few examples of those shortly. Sales, investments, two quite kind of active areas of activity. There's also lending and particularly the use of guarantees, and then private finance, which could merit a whole guide of its own actually. Everything from PFI through to PPP. So we really feel there's a lot in here, and I'm not going to obviously go through all of that section, but I'm just going to take us a little bit further. So if we can just go on to the next slide, please. We're just going to come up with a quick poll. I've thrown this in really because that discounting approach is kind of important to the way that government does its own appraisals. So we'll just pause and see if we get some consensus on that one.
Great. Well, we've got that moving. It's the usual thing here, Matthew. Our audience is pretty quick off the mark, so it shouldn't be too hard here. We're up to half the audience voted. We'll just leave it open another 4 or 5 seconds.
Okay.
Handing over. Here we go. So the results.
What do we have? Well,
an amazing.
Pretty mixed, actually, isn't it?
I can't believe it.
Well,
no, I got this year. They're not 6 people. I'm sorry, 8, 10 people online. There are quite a few more.
Yeah. Well, there we go. Well, I mean, the answer's the middle one. It sounds like, you know, a pretty kind of irrelevant question, but actually right at the heart of government's investment appraisal is this social time preference. Curious thing really is it's really not been reviewed since 2003.
Matthew, we seem to have lost sound on you for a second there.
And certainly from our perspective, risk and inflation are two major factors that perhaps need to be thought about. Michael,
You're back on there. You just might want to repeat the point.
carry on. So yeah, just as a little. Okay, yeah, so yeah, the answer is 3.5, and I think so. The government's Green Book investment appraisal guidance is where that comes from. So just moving on through the rest of the presentation. So case studies, we've informed our work with this list of case studies, and many other guidance documents are linked in the document. So if you look at it, you'll find that was just the purpose of that slide. So we could sort of move on to a little bit more detail really about, so if we go to the next slide. So yeah, so this is an example of the material. Again, I'm not going to read this out, but you'll find for each of those 14 sections, we've got a similar layout. And obviously it's informed by the sort of questions we'd come up with when we come and look at these. And I mean, I've read the report on the Royal Mail privatisation, on the Eurostar sale. Colleagues have looked at things around the Green Investment Bank. So we've done an active programme of reviews on asset sales. And hopefully if you look at that, you'll find some value in that, even if you're just in general M&A. So if we kind of move on to the next slide, we'll just pull up one slightly different aspect, and this acquisitions and investment area, we will run a poll in a second, is perhaps less represented in our past work than I feel we need to be thinking when we think about what's happening in current circumstances, particularly around companies that government may need to support, and we'll have seen the work that we did around the energy suppliers, that government support for businesses involves some form of investment or acquisition or potentially financing. But we have looked at quite an active activity that local authorities have been involved in the commercial property market. And we've also looked at venture capital investments, sort of pooled investments from government. So there's a little bit of NAO work in there, but perhaps I'm flagging that we might need to do some more there. So if we see more government activity, we'll be following up. Perhaps we can move on to the other poll, actually, because it's perhaps just asks people what proportion of all the commercial property acquisitions in the southeast of England were actually made by local authorities over that 3-year period.
Okay, folks, we're on to this one as well. The funny bit about this one was I was surprised at the answer myself, so I'll leave it to the audience. Probably drives you more to the first one or the third one, but here we go. Over half the audience, over 60% have voted. We're almost finished with the voting there, and I think we'll hand it over now. And the results here are interesting. So 2/3 of the audience got the right answer, and it is a surprising number, isn't it?
Yeah, no, exactly. Now, whether that continues at that level, it's probably not. It probably won't. I mean, there is some very specific features about this, which is as much driven by cuts in central government grants as fairly benign borrowing rates that central government was offering. So a number of local authorities were quite active to generate income, commercial income. That obviously that poses some quite significant risks as we look at the property market today. So it's obviously something to keep our eye on. So we're back onto the slide pack. So the point I mentioned earlier was about government balance sheet implications, and without becoming kind of a technical thing here, it's really interesting to see that there is not one single standard method of measuring government indebtedness. So what we showed there is a bit of a fan diagram that shows from the left the most basic measure, liquid financial assets, government borrowing, and then across to, on the right-hand side, the whole of government accounts, WGA, which is an IFRS accruals-based accounting method, which brings onto the balance sheet liabilities and assets that are perhaps not otherwise visible to the economics-driven method that the PSND uses. So I'm flagging something here. Obviously, for follow-up questions or things, it's probably better to take this offline. But one of the things that we've felt is that the narrower measure often generates policy reactions which take advantage of things, particularly on the liability side, being kind of invisible to the taxpayer, which doesn't fill us with huge confidence, and particularly the guarantees area, which even under the WGA net liability side, you won't see contingent liabilities there, but they are the the probable or possible cause of further exposure on the liability side. So if we just move on to the next slide, I'll just show you a little bit about some of the work we've been doing. So back about 5 years ago, we started focusing on the use of financial guarantees. There's a bit of a timeline there as Treasury responded, and we've seen iterations of whole government accounts. And then actually within central government now, there's a central capability really focusing on risk management and the uncertainty so that they can actually model some of these exposures better. So this is really just to illustrate the kind of work that we do with our reports is to drive a better focus on this risk management. Contingent liabilities is a very significant potential cash outflow. And obviously, in some circumstances, these liabilities retire and disappear without causing any cash outflow. So they could be very useful when you use guarantees to avoid cash outflow, but obviously that risk and potential outflow is hard to value and hard to predict. So that's part of our sort of influencing agenda. I'm just going to skim just briefly through one more example, Peter, so we can just go quickly on to the next slide. Oh, we've got our poll, final poll, right. almost missed this
Almost
one.
Forgot. Yeah, here we go.
Yeah. Okay, so the question here really is when we look at the Treasury's guidance on insurer of last resort, what's on the list? You can pick more than one answer.
Okay, well, off we go again, and we've got again last time, folks. I know the fingers are tired here. Got half the audience have voted again, and this time it's looking extremely good. All right, we'll close that poll. And what you'll see here is exactly what you'd expect. Most people did multiple results. So what was the answer?
All of them.
Exactly.
So yeah, we've got at least, I'm sure at least one person picked all. Yeah, no, I mean, there's just there's a really large exposure risk. Yeah, so just briefly on student loans. I mean, this was a complex piece of analysis. My colleague Simon Reason led this piece of work. The reason just to include it is that it's a novel asset class. It's future tax receipts that governments monetized, and so it's a very curious policy decision to actually sell what is going to be received through taxes. The investor doesn't actually take the risk that's relating to people's income, which drives the repayment. All of these loans are recovered through the tax code, but government did have a policy to sell them. There's just a few paragraph clippings there really from the report. So if you're looking at a really analytical report that we've produced on that kind of transaction side, definitely one I'd recommend. And if we're just going to go on to the following slide, it just gives a quick kind of overview of some of the sort of analysis that we did. And you can see there the face value versus the selling price, and what we tried to explain there was the different valuation techniques that were being applied, the risk adjustments, and how that obviously in some sense justified a sales price for government, so purchasing price for the investor, a significant discount to face value. And I think through that example, we show how this uncertainty and the novel nature of this caused investors quite a lot of challenge to really get their heads around what these things are worth. But ultimately, government was crystallizing, for cash, an asset which wasn't showing on its balance sheet, just because of the way that things are accounted for. Right, final slide, and we're just getting out of time. So just to wrap up, really just wanted to just explain, so government's involved in a wide range of corporate finance activity. It has various different reasons why these can be very complex. Accounting issues, as I mentioned, very important. We're there to audit this, but we also want to work constructively with officials. And that guide that you've seen there, and do have a dip into it, is really intended to help not just government, but also advisors to government and those who come into government to really ask the right questions and get better outcomes. So I shall pause and very happy to answer questions or start a discussion.
Okay. Well, I'm waiting for a few more questions to come in, but we can definitely start a discussion because I find this topic endlessly interesting. And folks, I would point to you in the chat room. You can find immediately the guide itself. This is a bit of a technical issue, so you might want to peruse the guide while you're composing your questions or comments. The first one, Matthew, is where does PFI and PPP fit in this? These were the great saviors, starting in the early 90s, and then they became a great London export, and now we don't seem to hear about them very much, except in vague terms.
Yeah, well, exactly. So we have one of those little buckets in the 14 categories is private finance, and we've kept it at that sort of 14 themes, and rather than going off into that particular area. But there's a lot of NAO work. The most recent piece of work was really looking at how local authorities plan for the expiry of PFI, and that was a Treasury decision, largely driven by concerns about value for money and the ability of these long-term contracts to continue to deliver the right service levels for public authorities. So it is there, but we've deliberately not majored on obviously what was a major policy area for quite a period.
Hugh Purser is curious, how is the cost of Quango shown in the government accounts?
Well, I mean, most Quangos just have a grant in aid from central departments. So when you look at the departmental set of accounts, you'll see all the organisations that it's responsible for. So departments sponsor arm's length bodies and Quangos. Some of them are companies in their own right. Very few of them have anything in the form of a balance sheet. They're mostly showing the salary expenditure netting off again, and property rental netting off against their grants, and then the program expenditure is typically coming through departmental accounts.
Hugh's kind of curious. Do you have not trying to put you on the spot, a rough figure today? He believes he's seen a figure of something like 170 billion pounds.
For what?
For expenditure on Quangos?
Yeah, I don't know off the top of my head. I mean, I think each department will have groups of public bodies. So there's a public bodies directory. There's actually, I think, still, if you search the government website, you can get a full list of public bodies. But I haven't sat down and tallied them up. I think perhaps that's something I could take as a sort of offline, not to promise the number, but just to kind of point in the right direction to find the right sources.
Super. Well, we got that email there. I'll get over to you. You pointed up in your wrap up that accounting issues are important. And clearly they are. And in fact, in many ways, it was the off-balance sheet potential of PFI that drove a lot of it structurally. But turning to kind of a different field, has Britain's exit from the EU changed our ability to maybe handle more state aid structures, or has it in some way actually freed something up that we hadn't been able to do previously?
I mean, there's obviously been new domestic legislation around subsidy control, which has, I haven't done a detailed comparison, but it's obviously now subject to that legislation. There are still kind of policy decisions to make about whether financial support is provided to a company or a sector or an industry. So I think the individual business case or rationale to do it needs to be clearly made, and I think government policy is fairly consistent that it doesn't unilaterally support individual companies, but it sometimes needs to. I mean, obviously these situations now with the energy market, companies like Bulb have had to be put into a special administration regime, and there's been announcements there about how government can exit that. So financial support for energy companies or strategic industries, the steel industry has been another one that's had regular review by government. I think the general principles are broadly consistent with the EU rules, but obviously there is domestic legislation that can allow for some flexibility.
Mm-hmm, mm-hmm. Now, the public sector relies quite a bit on advice from the private sector in these sorts of transactions. Is your guide also meant to help private sector individuals?
Yeah, I mean, we have a section on advisors and capability, and we divide that between, what do you have in-house? Do you have the right in-house capability? And when would you use advisors, and what would you need to get out of those advisors? So it's intentionally positioned to get departments to ask those questions of itself. But actually, if you are an advisor to government under contract, then you'll bring a range of professional market experience and process experience that isn't necessarily sitting on a bench in government, ready to go off at any particular transaction. It builds capacity. I mean, there is actually a lot of expertise in government through UK government investments and other major departments. So the corporate finance, as I've seen it over the years, the corporate finance expertise has developed quite positively. Something that obviously I talk to the profession regularly, and it's really encouraging to see that skills and expertise develop. But I think in major high-profile transactions, it's inevitable that there'll be advisors in a particular field, whether that could be accounting and legal as well as corporate finance.
Mm-hmm. And what's the reaction been to the booklet?
Positive, and I think people are pleased to see generally the NAO do more of these insights pieces. So obviously we did the seminar back in February on procurement. That's been a very helpful guide for me to do presentations to commercial and project management teams across government. Similarly with this, we see a lot of synergy between the procurement side and the corporate finance side for departments that are trying to engage in commercial activities. So for us, it's about putting together a message that avoids us having to be concerned about those transactions that we've missed out because we just can't review everything, and hopefully seeing good outcomes in as many aspects of this as possible. So it's certainly something when we talk with our key stakeholders in government, the accounting officers, the permanent secretaries, that they appreciate that there's now a stack of these good practice guides that are available for their officials, and gets into risk management and digital themes as well as the stuff that I do.
Okay. And how much did you find as you were compiling this booklet that the terminology differed, or did you find that you had to translate? I mean, I'm asking merely because I remember in the old days we used to have what was it? We would say the government was doing cost accounting and not accruals accounting, and then suddenly government came with a completely new term for cost accounting to pretend that it. And then it came up with a new term for accruals accounting, and you had accountants kind of trading these terms off all over the place until finally government just sort of quit.
I think there's definitely challenges in that area. I mean, even the phrase corporate finance, when you talk to local government, they often think about corporate finance being their finance function, whereas the central government has used the corporate finance label for a professional group that it's trying to develop. So we feel comfortable with that term. But actually, just the relation between the public finances and corporate finances, sometimes we're divided by a common language sometimes on this. So we've felt just articulating what we mean by each of these terms hopefully at least clarifies them to the extent we can. But there's definitely room for further education in this, and especially when you get into those accounting issues. They're not necessarily obvious to a professional advisor coming into government, that the different measures of public sector debt is actually going to drive policy decisions, and sometimes not necessarily to the most commercial and logical outcomes if they were looking at it from a commercial investment perspective.
Actually, yeah, it just popped into my head, resource accounting. That was the government phrase for accruals accounting, which drove everybody nuts on that one.
Well, there was also the government accounting conventions, which go back to the inflationary periods of the 70s. So unfortunately, and not to make light of it, we may be having to have another look at some of these themes.
Yeah, we will. And I think you mentioned there the long-term social discount rate has always come out in economics actually at below 3%, roughly around 2.5%. But one of the interesting things, sorry, 1.5%, and one of the interesting things about that is that it's actually equivalent to the natural death rate. So when you sample people, you actually get what they want, which is kind of, I want it as long as the payback is within my lifetime, which is fair. Now, you touched as well on some of the, just briefly in your last answer, on some of the unforeseen elements that arise from many of these decisions. One of them is competition, isn't it? The effect of these structures on competition. I remember almost the exact opposite when I was asked in 2009, in February, what to do about RBS, which had collapsed in February 2008 by an APVG. My answer was, we'll nationalize it, because the government owned 84% of RBS, and so the other 16% was inconsequential, and they didn't want to take it back. And then I said, well, actually, if you do, you privatize it the next morning, but at 100 units, and you actually get competition in 25% of the banking sector, which to this day has very little competition. Now, the difficulty then was people were saying, oh yeah, but we want to sell it and make money on it. Where does something like that effect on competition feature in this type of corporate finance structure conversation?
Yeah, well, I mean, it's definitely relevant. I mean, obviously, the piece that we did on the energy market showed the effects of low barriers to entry and then market failure as a result of wholesale price. So competition just erodes. We're actually doing a piece of work at the moment on competition in public procurement. So when government's a buyer, does it have a choice itself? So we're definitely thinking about the kind of market structure and the implications, and asking departments to what extent they factor those into the decisions that they're making. And I think without kind of looking at taking any individual example, it's a really important question that we should be asking, because these major transactions can shape markets for better or worse. And if the diversity of supplier base isn't part of the factor, then you can end up with quite kind of challenging monopoly situations, which are very difficult to regulate.
Mark Fields online, and he says, why was no attempt ever made after we bailed out RBS and Lloyd's banks to calculate a turnaround or restructuring premium, rather than simply aim to get our money back, taking no account of inflation, let alone the opportunity cost of the bailout?
Yeah, I mean, we've looked at those sale processes, and we've pointed out ourselves that it was just a kind of net cash in, net cash out question, and the borrowing cost, the opportunity cost wasn't necessarily built in. I mean, obviously that leaving that out makes it easier for government to justify that the outcome has been a success, and that's a slightly cynical kind of answer. But obviously, when we look at these things, we will try to understand the cash flow basis that put into place the borrowing cost and the opportunity costs, and that, I mean, that's one of the reasons to highlight those discount rates, is that even not even including quite modest government return rates can it's obviously, you know, an essential part of the evaluation when you decide to start a new project. It also needs to feature in decision to sell assets, but it can create some anomalous kind of situations, because if government has the lowest cost of capital, then actually it should own everything, which is obviously completely counterintuitive and not going to help you with that kind of market economy side either. So it's then comes back to the risk adjustments that you put into these equations, which was a huge amount of judgment needed. Government's ability to, you know, accurately or reliably measure and estimate risk, and actually then understand what it's got right and wrong, I think is just another area for perhaps another seminar. But yeah.
And here, Purser has an intriguing question. Has the sale of the student loan book to the private sector affected the credit standing of the students?
Yeah, well, I think there were times at which, and I haven't followed that up in detail, but people's ability to get mortgages alongside their debt, you know, there are factors about individual affordability, you know, that will play out, because you know, any lender is going to take account of people's individual financial circumstances. I think the sale itself, the transfer of these loans from a government balance sheet to a financial institution balance sheet, hasn't affected the borrowers in any way at all. You know, and actually our analysis kind of looked at it, and a policy at that time was intended to be rolled out on quite a wide basis, but actually there've always been some doubts as to the value for money logic on basically selling for cash a future tax receipt, which doesn't have any underlying impact on the repayment profile.
Mm-hmm. Yeah, it does smell a lot like the publicani in old Rome, the old tax farmers out there. Yeah, it is a bit scary. Um, uh, when you're looking at a situation like this, there's a whole class of corporate finance that gets arcane quite quickly. So, for example, here on FS Club, we've had various proposals for reinsurance vehicles, pandemic re's. Xian's been putting forward to the government for some time the idea of a cyber catastrophe reinsurance facility. We've also been working with some of the universities on a university fees guarantee scheme for students to help. Basically, Australia has a similar scheme like that. Are
Yeah.
these esoteric? I don't think they're esoteric, but some people might. But are they also included in your thinking in this booklet, or is that for another supplement or something?
Yeah, I mean, I think we've produced a report which is modular. So if our work takes us into other fields, we can add to it. The issue on financial guarantees is definitely something that we picked up, you know, several years ago, and we've seen a lot more use of guarantees through the pandemic. But you know, government likes those guarantees because they can, you know, generate a premium income. And in many circumstances, if the scenarios work out to their advantage, not suffer cash outflow. But it comes back to that piece about having central capability to understand risk profile and pricing issues as to whether government's entering these sort of opportunities with its eyes open, or bearing undue risk that obviously ultimately will come through our taxes. Yeah, no, I mean, we've recognised the use of these kind of insurance schemes and factored them into that section of the report.
Okay. A lot of the background, I mean, a report like this is to some degree most useful in the hands of somebody who kind of knows what they're doing, but isn't really au fait with the full environment within government of some of the case studies that you've shown, or fully aware
Yeah.
of maybe some of the terminology and conventions. What is the general state, in your opinion, of education of people who are at this interface?
I mean, there's part of what I do is obviously speak to the government's professional kind of team. So there's, you know, there are specialist functions in commercial, corporate finance. I mean, I was yesterday at the government finance function leadership conference. It's an afternoon event. So I think general awareness of this stuff is very strong. And I think where the gaps are often is in a political decision making, policy making, doesn't necessarily bring in that expertise soon enough to do the appraisals and make those sound decisions. So I think it's about applying that right capability early. I mean, this is one of the reasons why we put the capability in that kind of core set of principles, that you need to apply the right skill sets. These are and can be quite complex activities, and that they do require professional expertise.
Mm. Hugh Purser again, I think you may have half rolled over the answer in my question, but I think he's got a point, and I'd just like to, Hugh's direct question was, does the civil service have adequate trained staff in this whole area to do the job? So I'll start there and you can answer that, and I've got maybe a supplement on that.
Yeah, I mean, I would say people with the right skills exist. Are they always in the right place at the right time? Quite often not. Are they resource constrained? Definitely. Is there more activity going on than perhaps people have planned or foreseen? Certainly. But I don't think you should stereotype the civil service as generalists who can't get their minds around complex issues. I think generally speaking, when we talk to officials, there's a huge amount of expertise, and obviously we're setting a high bar when we come and do our evaluations, and we're quick to point out where we haven't seen good standards or good skills being applied. But there's always room for a lot of improvement, as we know.
Good. Well, actually, I love it when somebody asks my own supplementals for me. So well done. This was exactly the logic train I was on. And if I may, then we're running to time, but a closing question for you: what individual, perhaps, or what role? Where would you most like to get this booklet into the hands of one person? Who would it be?
In terms of audience, I mean, the accounting officer roles, the chief executive of departments, are the people who are on the hook. They're accountable to Parliament for the outcomes of their departments. So we'd hope that there's enough here. There's a section right at the beginning which just has a page of key questions for each of those 3 areas, which enables somebody just to get enough of awareness that there's a lot more to this. Dipping into each of those individual 14 sections, I'm not necessarily expecting that accounting officer would be doing that, but they should be armed here to know that they need the right people in place.
Right. That was very much about the principles and concepts, the organizations and functions and the transactions, right? Yeah.
Exactly.
Okay.
Exactly. Yeah.
Well, this has been really useful. I know a lot of people will find me, a tiny bit of a detail person for loving this, but I think this whole booklet series is really plowing it up, and I hope at some point maybe you can share some stories if other countries are paying attention and sort of bringing out their own equivalents or things like that. But,
yeah, I mean, it definitely gets attention with our equivalents in other government audit offices around the world.
Well, that's the one party I must get a ticket to, the International Government Audit Office.
That was Brazil 2 weeks ago. You missed it, unfortunately, Michael.
Not on my expense account, but on the taxpayers. No. Matthew, it's always like to have you here. The real charming face of the civil service, but also the thoughtful head behind it. And we really appreciate the work that you're doing.
Super.
I will give you the traditional FS Club applause, which is off of our new technology device.
Brilliant.
A reminder to thank all of our sponsors, if I may, for all that, and thank you for participating. It is one of those heavier webinars, but I find it exciting. And we do have some interesting stuff coming up, not least tomorrow, a focus on Tallinn, Estonia, some amazing things going on there in financial services, and you can check out the rest on the website. But we hope to have Matthew back, or one of his team back next year, to talk about another booklet that's coming out, but we'll save that for later. Thanks again, Matthew.
Super. Thanks very much, everybody. Bye.